Good morning, crypto enthusiast. Welcome to the Leap Podcast, your source for cryptocurrency updates from Leap Digital Investments. It's Monday, 3rd of November, 2025. I'm Patrick Penn. The market is pricing in a Fed pause while institutional capital quietly rewrites the playbook. Bitcoin hovers at $110,581. Ethereum defends $3,870, and Solana, despite a minus 0.46% dip, sitting at $184. Long-term holders are dumping, institutions are rotating, and the conditions are primed for a potential short squeeze. Let's dissect the structural pivot, keeping it sharp and clear. Let's leap in. Bitcoin surges back to $110,581 USD, up 0.61% in 24 hours, erasing October's red candle and reclaiming the 200-day moving average with authority. Japan just flipped the switch. Tokyo Electronic Power Company, the nation's first state-backed energy giant, is now mining Bitcoin with 4.5 megawatts of grid stabilizing rigs. That's enough to power 3,000 average homes. This makes Japan the 11th non-US country with government-linked BTC operations. This isn't greenwashing, it's energy arbitrage tied to national grid resilience. Supply-demand math doesn't lie. ETFs and public companies absorbed 1.48 million BTC year to date, while miners produced just 357,000 Bitcoin. That's a 4.2x imbalance against supply and demand, and the effects of the recent halving are still fresh. Fundstrat's Tom Lee sticks to his guns. A $250,000 within 75 days Bitcoin price target, now backed by diplomatic tailwinds. US Treasury Secretary Scott Bessent held closed-door meetings with Singapore's PM on Bitcoin reserve adoption, praising their stablecoin framework as a global template. But it's not all clean news. BlackRock dumped $721 million in a single session, part of a $799 million weekly ETF outflow, the worst since April. Long-term holders offloaded 405,000 BTC in 30 days, 33 billion or 1 billion daily selling pressure, the most aggressive distribution since December 2024. Even MicroStrategy, the corporate BTC influencer, slashed purchases 99%, from 55,000 BTC per week to just 200, despite sitting on a 31 billion in unrealized gains. Support clusters at 108,500 to 109,200 for Bitcoin. A weekly close above 112,000 would see 12.8 billion in BTC shorts positioned for pain. That's a lot of worried traders if Bitcoin recovers back up to 112,000 USD. Ethereum. Contrarian activity is happening. Ethereum at $3,870, down 0.13%, but on-chain signals are showing strong conviction. The ETH 2.0 deposit contract just recorded its busiest day in over 4 years. 823 million staked from 3,100 plus wallets. October logged 728 million transactions, the highest monthly volume across all crypto ecosystems. JP Morgan confirms ETH accepted as loan collateral by year end, joining BTC in institutional balance sheets. October ETF flows bled 98.2 million, and a mega whale is nursing 20+% in losses on a $500 million bag. That's $100 million unrealized in the red. $4,000 is the line in the sand, and if Ethereum reclaims it, $4,500 comes into play, and Tom Lee's $12,000 USD price target for the end of the year can still breathe. Solana. Solana at $185.29, down 0.46%. But institutional momentum is highly active. BSOL just became the first number one US ETF launch of 2025. 420 million weekly inflows, 150 million in the first 3 days, 69.5 million on day one alone, outpacing BTC and ETH combined. Support at $175, resistance is at $195, break higher, and $220 is the next station. To the counter narrative, October closed red for BTC, first time since 2018. Yet institutional BTC accumulation hit 2 billion plus since the 10th of October crash. SOL ETF inflows now lead the pack while BTC ETFs bleed. This isn't noise, it's capital rotation. Long-term holders are distributing, but institutions are absorbing. MicroStrategy pauses, but nation-states accelerate. Retail capitulates, but JP Morgan builds collateral infrastructure. Fear and greed flashes extreme caution, yet open interest rebuilds lower. Traders are buying the dip with leverage. The Fed's 25 basis point cut was dovish in action, but hawkish in tone. But QT ends in December. Macro tailwinds persist beneath the rhetoric. Reference points have shifted from moon to preserve gains, but institutional construction runs deeper than ever. Putting it all into context, Powell's pause is a liquidity tremor, not a structural shift. The market is maximum long, minimally hedged, pricing 6 to 12 months of loose policy off one cut. When the shallow easing cycle reveals itself, repricing will be violent. That's your crypto news update for 3rd of November 2025. For more information, check the description on Spotify or YouTube. Stay informed, stay strategic. Thank you for joining the Leap Podcast.